Welcome to Momentum Monday. Today is January 16th, 2023.
Straight up one of these bands. These are great.
Yeah, I mean, you can definitely fix your posture with them if you know what you're doing.
I'm coming at you. I haven't showered, so I'm just putting on my cycling warm hat.
You're advertising, right?
I'm not an investor. This is a French brand, but yeah, I love this brand. All right, what do we got?
I mean, so far year to date, we're seeing a lot of buying going on, and it's widespread. And obviously, the worst performers from last year are up the most, which typically happens in January. We're talking about crypto-related stocks like Coin and the miners, Mara, and but also, China, which was the first group to really break out on January 2nd or 3rd when it was the first trading day. So you have industrials and retail, quite a few sectors which just have been rallying in the first couple of weeks, and everything kind of started, I think, the previous Friday, when the employment report showed that wage growth has slowed down, which is one of the indicators that the Fed is really watching very carefully, because it could be an indicator that inflation might be coming down. So as usual, the market, front ran the Fed and is pricing in, let's say, a more dovish Fed potentially, which personally I don't think is going to happen. Personally, I think that the market rally and the rally we see in commodities will just be one more reason for the Fed to stay on their current course. They have no reason to do anything else.
Yeah, buyers are probably not helping themselves, because I think the Fed definitely doesn't care about the stock market. So this just gives them the power to just say, hey, these rate hikes haven't killed us.
Yeah, they'll say the economy is not broken. Until we get to 2%, there's no reason to do anything. This is why I think that, people should not get overly excited. Obviously, it's a great trading environment. Just trade it aggressively if you want to and just make your money, but have an exit strategy, because the Fed is still tightening as of right now. And but definitely, so many sectors are rallying. Semis, software, everything that was really hit significantly. And one big reason is the quite significant pullback in the US dollar since I don't know, since October.
No. I mean, it's completely inversely correlated. JC at All Star Charts have been covering this for a while. It's completely playing out as you're not getting a huge tech rally. It's really kind of been in crypto and China. It's not like the software stocks have benefited from this, but I don't know. I mean, the US dollar going bonkers was not great, but the US dollar quickly imploding is not great either. We want to see some kind of stability. I would say the most bullish thing, Ivan, is the VIX dropping below 20 and just some risk on. Listen, I mean, the Fed isn't going to save us. And the market has changed. So I think active investors, I'm not great at it, but active investors are going to have an easier time than indexers for the next few, I don't know, the equal weighted stuff has started, as we've been talking about here for the last few months, equal weighted stuff, indexes, which no one really even understands or thinks about or has access to. It gets so beat over the head. I saw QQQ had TV ads. That wasn't a good sign. That the actual Invesco guys are doing ads in a bear market. And the ads were I mean, I have to say the ad was terrible. It was like making fun of of tech. So I think it was bad. That isn't a sign of a bottom. It's still overowned. That's what I worry about. Tech, and I'm not saying that's bad or good. It's just overowned. So when you own tech, like that's not a bounce. I mean, we could still have a 20% bounce and they'd be in downtrends. But I think what you're saying is right. There's this shift. It's been obvious now for a year towards commodities and value-ish companies. It's still going to have to be growth if these stocks are going to continue to go up. But as I look through this, the darlings of growth, I was looking at a long-term chart of Lulu, and I've been bearish for a while. Not so much bearish that it's going to zero, but just they're kind of stuck. It's still a great company, but like on the top end, you have Aloe, and then Lulu's kind of stuck, and everybody can compete against it at a lower price for pretty much the same product. And so it's just a lot of growth that's like switching over. And it feels like unless you're catering to the 5% or 10%, like the LVMHs of the world, you're better off being in the value stocks, right? So it's like the very highest, priced stuff has a market and has margins. And there you can see it there. Listen, I don't buy any Gucci or LVMH, but it doesn't appeal to me. But like the margins are insane in that. Whereas Lulu is now just mainstream and like kind of like the Gap 2.0, right? Like you don't go wrong, or you don't get fired for, your kids won't yell at you for buying Lulu, but it also is not exciting. So it feels like this market where like the edges have, but it's just a tough market for someone like me, because the playbook's changed, and I know the playbook's changed, but it's I don't have that muscle to spend the time to really get conviction around anything other than kind of equal weight and commodity stuff. So how are you playing it? And I think until the S&P, it does look like we're going to continue a rally, and with the VIX below 20, it feels like there's some, and the sentiment is so bad. And it's not like the Fed's going to like take the stuff to 8%. I just think they have reason to just stay the course, like you said. And I think
they'll probably just slow down, but remain.
I mean, earnings is this week. Goldman's tomorrow morning.
Yeah.
So it'll be interesting. Let's pull up Goldman. They're just getting their ass kicked by.
So earning basically started on Friday with the banks.
Give me a weekly at Goldman. Again, their core business is strong because there's no competition. But go to a monthly. But Apple's going to eventually. So the setup's nice. I just where it's a good setup. I just think they're getting their ass kicked in the Apple deal, and I think the market's factored in that they're going to have a good quarter. So, if Goldman's what I got to own, it's not that exciting a market for me. What else is looking really good? Axon was one that continues to act well. I think they own their vertical. They have that private cloud, like I talk about in security for cops and for law enforcement. What's this one? Academy?
Yeah, anything gun related.
Axon is Taser, as you know. Yeah. So I'm a big fan.
Of Taser? You like getting tasered?
Well, no, I like their cloud business, right? Like they are like the Amazon Web Services for police.
Yeah.
Right? Like every cop has a camera on their chest, and that goes to Axon's private cloud, right? So it's not like
crazy.
Yeah, that is a hell of a nice base, and Taser's a hell of a good product. Okay, so that's setting up to really go. It's not like some crazy expensive stock. It actually is a crazy expensive 60 times earnings. So again, I don't know. Like in this market, buying 60 times earnings is just not my thing. But if there's going to be later or surprise to the upside, that looks like it. There's just no room for error if they miss.
Yeah, that's correct.
Okay.
Especially considering that so far year to date, all of the price leaders from last year have been getting hammered. Like all
Yeah,
the
Enphase. Oh, yeah, Enphase, ENPH just getting.
anything that was strong last year, really, yes. NOC, these are the defense stocks, but
Oh
Enphase as
wow.
well, ENPH. So definitely some mean reversion at the beginning
Yeah.
of the year.
Mhm.
And earning season started on Friday. JP Morgan, Bank of America, Citi, they all beat estimates, but they said that they're increasing their credit loss provisions because they expect more of their customers to default
Yeah, give me the monthly on that, JP Morgan, and
on their credits. And they initially gapped down on Friday, but closed strong. So the market bought the dip. So definitely the current sentiment is just to, buy the dip
yeah,
at this point.
better than sell the rest
Yeah.
of this. I'm not that super long, but I prefer the market going up in my age. Prefer happy America.
Yeah, JPM is the strongest bank, definitely looking better than Bank of America or Citi or Wells Fargo.
Well, I think a lot. How are the regional banks doing? I just think any of these large market cap things are over.
Yeah, I mean, I guess not that great. He's SBNY. Which one was the Silicon Valley? Let's see, Silicon Valley. Trying to bounce. Silicon Valley was one of the worst
No,
performer in the
regional
S&P.
banks. What's the regional?
Oh,
RE,
KRE. Yeah. I thought you're asking.
Okay, so I don't know. Like they're not. I mean, the ones breaking out are Schwab and Interactive Brokers, I would say.
Yeah, the brokers definitely doing better than the other financials. Interactive Brokers, I think, looking better than all the other brokers, for sure. I don't know why. I mean, I'm happy with their product. I use them, but maybe they're growing. Oh, earnings tomorrow, yeah. So
Yeah, low float, great earnings, it's kind of a lockdown on institutional
how is Robinhood doing?
financial
Let's see.
trading.
Yeah, it's
We got
kind of rallying
bubbles.
with the rest of the
Yeah, look at the
crypto-related
blue
stocks.
lines. Like you could have a nice surprise to the upside there, right? You see the blue accumulation here.
Yeah, definitely. Yeah.
There's that overhang of the FTX scam, fraud stock that they own, but I think that's now priced in.
Yeah.
But anyways, Hood's it's not the market anymore.
So anything is running, even home builders and stocks related to homes. I don't know why they're rallying, but they are rallying.
Well, I mean, Zillow, Redfin was their competitor, and they're almost out of business because of their commercial. So you also got to understand the competitive landscape. I mean, because these guys have, a huge amount of debt, convertible debt on the balance. So they're a big competitor to Zillow, whereas Zillow's been basing for a year because they got out of the bad Opendoor business. Redfin's just basically, and then you can see, Opendoor kind of rallied a little bit there. Anyways, so the shit's rallying.
All the junk is rallying right now, yeah.
And some look better than others. That had base for about 8 months. Zillow, and it was probably the best of the worst in these like beaten up internet large brands.
Yeah, even biotech tried to break out last week after spending multiple weeks in a sideways range. So
yeah,
definitely interesting.
How are you positioned right now?
I'm trading
this is
actively.
Generally a pretty good month of the year. So especially
I'm pretty active. Yeah, I'm active. I'm taking long stock positions. I'm buying calls. We traded like Shopify last week. We did great on Friday when it broke out. Probably it has a chance to follow through this week. Like I've been buying like Chinese related stocks, like SC has a chance to recover, like PDD, BABA. I've been playing those types of stocks. Also Nvidia, like the bounce, it broke out on Thursday, so I bought it here on that breakout.
Yeah.
So I'm just taking, some short-term swing setups. I'm not really looking for anything longer term yet.
Yeah. My big idea is that, Lulu's like these brands that are stuck. They're great, but they just kind of are stuck in the middle, are going to struggle.
So
I
do you
don't
want
know
to
if
short
continue
them,
to
or
get-
you just
What's
don't want to
that?
own? Do you want to short them, or do you just don't want to own
I
them?
mean, I don't short stocks, but I just think it's going to be tough. Lulu can't afford any mistakes because all these Instagram kind of brands are there. I feel like this for any brand because in this era of like saturation and slow growth, at least for these overpriced, there's just no room for error. You know, with 5% interest rates, right? You've got to really have a good growth story to convince me. And then that QQQ ad just threw me off, like just bad taste, bad timing, marketing and index. So I still think rates hold the key to like what the next big move is.
I mean, yeah, so far the market has been predicting the possibility of a recession since the
Yeah.
yield curve has been
Yeah, the
inverted.
inverted yield curve is like the worst it's been in like 40 years.
So we will see. The stock market
Yeah.
is saying maybe we'll get soft landing. We'll see who's right later in the year. I think it's just great environment for active traders.
Yep.
That's all I have to
Yep.
say, basically.
I think it's going to be a great year for you, and I think it'll be a tough year for those that are indexing. And then what I mean, that's my only big idea is that people in indexes or market weighted indexes should expect to, not have the same returns as they've had for the last 6-7 years, especially in tech. But I hope I'm wrong, as usual. Like at my age, I hope I'm just wrong because
If you're right, the opportunities at the end of the year will be incredible if we have
Yeah.
another down year. And if you're wrong, even better for everyone. So,
Yep. All right, buddy. Have a great week. Everybody have a great week.
all right, you too, Howard.
Cheers.